Hi guys, welcome back to Bulls and Bears Market YouTube channel, and this is our weekly roundup. So this is where we give you the gist about what happened in the forex market and also on the Nigerian Stock Exchange in the past week. We also give you a sneak peek into what to expect in the coming week, so please come along with us. The major highlights for this past week has to be the downward movement of the US dollar. So we saw US dollar start to fall from its record high level. If you watch our last weekly roundup, you would know that we mentioned that US dollar dominated the market for about 2 weeks. For 2 weeks, US dollar was the king of the forex market, but all that came to an end in this past week. Also, the Nigerian stock market remained mixed in line with expectations. Sell-offs and bargain hunting continue to rule the Nigerian stock market. For the Nigerian stock market, the first trading day of the week saw a big sell-off. If you remember in our last weekly roundup, we noted that the CBN announced a technical devaluation of the naira and that investors are going to react to that. So the investors actually took it out on the market on the first trading day of the week. But as the week went along, companies started to release financial results and announce dividend payments. All of that spurred bargain hunting. All of that spot banging on us back into the market, and we saw prices starting to stabilize. On the first trading day of the week, market lost 2.2%. That is a huge loss. But as the week went along, price started to stabilize. The market ended the week with a week-on-week loss of 1.52%. The market had 34 gainers and 30 losers, and 4 of the 5 trading days had more gainers than losers. If you want to know why it is that 4 or 5 trading days will have more gainers than losers and the market will still close on a negative note, then you need to go watch our video on the giants of the stock market. For currencies, the US dollar took a bow. So like we noted before, for 2 weeks, US dollar was king of the forex market, and then it started to fall in this past week, mainly on the back of technical analysis. So if you understand trading and how financial instruments are traded, you will note that when a financial instrument is moving upwards and then it gets to an overbought region, sellers will come in and start selling off that financial instrument, and then the financial instrument will start to fall. That was exactly what happened with the USD index in this past week. For the past 2 weeks, it's been going up, but last week it got to overbought regions, and then the bears sellers stepped into the market and started to sell off the US dollar index, and then it started to fall. Also, as the week went along, unemployment claims was released. Unemployment claims is an economic data that is released every Thursday from the US. It's an economic data that tells us the number of new people filing for unemployment insurance every week. So it's usually in the region of 200,000 people. But in this past week, we saw it rise to an historical level of 3 million people, and that was basically on the back of the slowdown in economic activities as a result of the coronavirus issue we have right now all over the world. So all of that wasn't positive for the US dollar, and so all of that pushed down the US dollar to the level it was before it started rising 2 weeks ago. So currency pairs like Euro USD and GBP USD had a wonderful week. Euro USD in its usual fashion mirrored the movement of the US dollar index, and then it went up. The US dollar index was down, Euro USD was up. If you are conversant with the forex market, you will know that Euro USD and USD index usually move in opposite directions. If you want to know why that is, then you need to take our forex training classes. Our email address is below this video. Send us an email and we'll tell you more. We'll give you details on how you can become one of our students. So the Euro USD was up throughout this week. GBP USD also had a wonderful week. GBP USD moved up by almost 1,000 pips. GBP USD probably had its best week for the whole of the month of March. This past week, it was a wonderful time for Euro USD and GBP USD. USD CAD also looked good. This Canadian dollar also had a wonderful time this past week. So if you've been following our weekly roundup, you will know that we talked about how all prices negatively affected the Canadian dollar just because of the correlation between Canadian dollar and oil prices. So oil prices was down, and oil prices were down, and so Canadian dollar was also down. But despite the fact that oil prices are still low, Canadian dollar regained strength in this past week, mainly on the back of the of the fact that US dollar was down. So we saw USD CAD start to fall. If you're looking at our screen right now, you will see that we have 3 charts on the screen. We have a weekly chart for GBP USD, another chart for Euro USD, and then the last chart is on USD Canadian dollar. So it's a weekly, they are all weekly charts. And if you're looking at the USD CAD weekly chart, you will see that we have two big bullish candle and 1 bearish candle. So for the past 2 weeks, the USD CAD has been on a bullish trend, but we saw that it started to move downwards in this past week as Canadian dollar regained strength. On Friday, the Bank of Canada announced an unexpected rate cut, a 50 basis rate cut, and then they also mentioned that they would start asset repurchase program, which they've never done before. So all of that affected the Canadian dollar for about a couple of hours, but we saw that the Canadian dollar returned back to its to the trend that it was before the news was announced. So it didn't really affect the Canadian dollar, but we will see how it goes this week. We'll see how oil prices and that announcement by the Bank of Canada on Friday will affect the movement of the Canadian dollar in this coming week. Usually it should be negative for the Canadian dollar, but we saw that the market didn't really react to that news on Friday. So we'll see how it goes for Canadian dollar in this coming week. So for the Nigerian Stock Exchange, going forward, we expect that the market will remain mixed. Sell-ups and bagging on thing will continue, most especially now that there's been an announcement of a lockdown in Lagos and the FCT. That will bring a bit of fear to the market. But that notwithstanding, we actually think it's a very good time to invest in the Nigerian stock market. So if you follow the Nigerian stock market, you will notice that directors of companies actually started to increase their shareholdings in their companies in this past week. So a couple of companies announced that their directors are buying up more shares in their company. So if directors are buying shares, are increasing their stake, their shareholdings in their companies, is a signal that it's a good time to actually buy those shares. So it's a good time to invest in the Nigerian stock market. A lot of sound fundamental stocks are actually at record low prices. A lot of stocks are trading at very attractive prices. It's a very good time to buy shares in the Nigerian stock market. So if you have discretionary income that you will not use, money that you will not, if you have a bit of discretionary money that you will not use in the next year or two, not money that you need in the next 2 months, money that you won't need for a year or two, you might actually consider investing in the Nigerian stock market. But before you invest, please consult a financial advisor. You better see that consult Bulls and Bears Market. Our email is below this video. We'll give you information on how we'll guide you on how to invest profitably in the Nigerian stock market. So we expect that going forward, the markets will remain mixed. For currencies going forward, we just advise traders to just follow the trend. This is what has been working for us in this past week. So the economic landscape of the world has made currencies trend like they haven't done in a long while. So if currency pairs are going up, they are trending upwards. If they are going down, they are trending downwards. So excuse me. So it's actually a good time to just follow trends. Not try to overanalyze the market. The market is very volatile at the moment. A lot of countries are still on a lockdown, so a lot of banks are not participating in the market at the moment. So please just follow whatever trend that the currency pair you want to trade is in. Just follow the trend, note the trend and follow it and make money. That is how we'll be making money from the markets in this past week. In this past weeks, on the side of economic data, we expect inflation numbers to come out from a couple of European countries. We also expect PMI numbers to be out from a couple of European countries. Also from Britain, we expect quarter-on-quarter GDP. And also the big one for this week has to be the non-farm data that will be out on Friday from the US. So you want to look out for those economic data before you take trading decisions. But just note what the trend is and follow it, and keep in mind that more countries are going on lockdown, so the markets will continue to be very, very volatile. So you want to be careful in taking position. Note your supports and resistance, and just note when be careful with your entry and exit points in the market so as not to lose money. So that's just basically it for our roundup this week. Thank you for watching. If you're yet to subscribe to our channel, please subscribe. Also, we would like to know what your thoughts are on financial markets this week, so please get into the comment section and give us your feedback. Thank you for watching once again. We will see you in our next video. Bye.